Chinese data released today shows that gross domestic product rose by 7.3% in the July-September period, more than predicted by analysts. Speaking with me now to talk through this data, among other releases out today, is Rajiv Biswas, Chief Asia-Pacific Economist with IHS. Welcome, Rajiv. Now, there's been modest relief with the data showing today that the Chinese economy grew slightly more than expected, but this seems to have been replaced with concerns of weakening momentum in the world's second biggest economy. For you, was this a positive move? Or are you more concerned, considering that this was their slowest growth rate since 1990?
Well, certainly there's some concern about the slowing momentum in some sectors of the Chinese economy, but I think in general there's a sense of relief that China, the economic growth rate that was recorded was actually on expectations rather than falling below market expectations, which some had feared. So from that perspective, it was a relatively well-received result. Looking, at what this implies, I think it still shows concerns about the underlying momentum in some sectors of the economy, particularly what's been of concern through most of this year has been residential construction, which has been quite weak. And we're still seeing weakness in fixed asset investment, which reflects that weakness in construction. So that continues to be a concern as far as the outlook. For the year as a whole, with this result of about 7.3% growth, we expect that in this calendar year there will be 7.3% growth. And the outlook for next year in the order of about 7.1% growth next year.
Retail sales growth slowed to 11.6% in September from a year earlier, and factory production grew by 8%, up from 6.9% in the previous month. What are the major factors contributing to these numbers?
It was quite encouraging to see a rebound in industrial production because that had been quite a big concern, the sharp slowdown that had occurred in August, though there were special factors behind that, including a year-on-year effect. So I think there is a sense of relief that industrial production is somewhat better than it was indicating last month, but it's still relatively on the low side for Chinese trend industrial output growth. So it's still a bit on the moderate side. We're seeing in the PMI index for manufacturing that there isn't much sign of a big rebound. But exports have been doing very well of late, particularly boosted by Chinese exports related to the Apple iPhone 6. So we've seen very strong exports. August was a good month, but September was even better, with very strong increases in exports, particularly of electronics, to the U.S. and other major markets worldwide, reflecting that. So I think overall there's obviously weak patches in the Chinese economy, but overall it looks like the growth momentum should be in the order of just over 7%. And the fears of a hard landing for the moment are probably not appropriate, but we still remain concerned that over the next 2 or 3 years that the imbalances in the Chinese economy remain a key risk, and the Chinese government's going to have to manage the situation very carefully, particularly the issue of the slowdown in residential construction, the situation with shadow banking and regulating this unregulated expansion in credit over the last 4 years out of the shadow banks. And also the formal banks also have their share of issues with large non-performing loans related to local governments and also to property developers. So all of these issues remain a downside risk, I would say, over the next 2 or 3 years. But I would say in general the results that we saw today are somewhat positive and encouraging that the Chinese economy should at least be stabilizing.
China is now targeting for 7% growth for 2015. Do you think this is likely?
We still have in our own forecast for 2015 that China will grow at 7.1%. There are downside risks around that forecast, but I think that at the moment we're still expecting growth of that order to be manageable. And that's helped particularly by strengthening exports that we've already seen clear signs of. And particularly the stronger U.S. economy is helping. There's, of course, a lot of doubts about what's happening in the Eurozone, and I think one of the risks for China is if the Eurozone slumps back into a situation of stagnation with close to zero growth, then that would hurt Chinese exports. But right now, the U.S. is looking good. Consumer spending seems to be improving, and that bodes well for Chinese exports to the U.S. So that will help. And also, the Chinese government itself is using modest stimulus measures, both monetary stimulus and also fiscal stimulus measures earlier this year, to try to keep growth on track at about 7%. So we would expect that that's the order of growth that we're looking for.
Thank you, Rajiv. Great to speak with you. That's all for now, but Dukascopy TV is regularly updated, so do stay tuned.